Okay, good afternoon. Today, on behalf of the CFO, our IR team will have some presentation with you on deep dives on the performance of 9 months 2025. Yeah, how we achieved so far. So let's start first, around very briefly, 10 or 15 minutes, and then we can have the Q&A. Okay, Ms. Zhang, please help. Yeah.
Thank you, everyone. And probably from the morning till now, you have heard a lot about our business initiatives and what the other business head from our corporate and as well as retail has shared with you about the performance of the portfolio and also the business plan for each and every portfolio within the bank. Also, our CEO have shared with you about our strategic direction in 5 years, the capital plans, and all these achieve the business outlook that we plan to have. So within this session, we'll go further in details more into our financial performance. Each and every categories that we have achieved over the past 5 years. Probably this is a recap of our 9 month 2025 business highlights, and later we go further into different angles of our business. So by the end of September 2025, we're quite very proud that we have successfully exceed 1.18 quadrillion in terms of total asset at consolidated level, and we sustain our number one position among all private bank without state ownership. And the achievement that we have got from that total asset will contribute quite a lot from both parent bank as well as from other subsidiaries within our ecosystem, which our CEO mentioned about the recovery of subsidiary Credit, along with the bold performance of VBank Securities, our brokerage arm, which their margin lending achieved like threefold higher than year end 2024. We also have demonstrated a quite positive performance of deposit mobilization, and we have actually um, mm, uh, mm, raised the deposit from right from the beginning of the year to cope and to maintain the healthy liquidity profile with the bank. In terms of total owners equities, we always stay a very top position among all banks, and we are right now the number one in among the industry in terms of total equities, and our capital adequacy, as our CEO already shared, that constantly stay around 14% level. So among the leader in the industry. Other efficient indicators like TOI or PBT or NIM or CIR, you all know that this year was quite a very successful year, and proudly saying that we have achieved a very positive performance in 2025. And currently, by the end of 9 months, we achieved nearly 48% growth in terms of PBT, and we can, maybe to now, our CEO has said that we can proudly say that by the end of 2025, we can, successfully exceed the plan that we have set at the beginning of the year for consolidated bank, and that also recognize the contribution very positively from all members within our ecosystem, from parent banks, FE Credit, the consumer finance arms, brokerage, figuring securities, as well as the insurance company OPAS. Coming to our financial trajectory since 2021 in terms of balance sheet have seen constantly a quite positive number in terms of total asset credit growth, deposit, as well as the total owners equities, and on above the CAGRs of 20% on a compound annual basis. If we go deep dive into the credit portfolio, yes, if we deep dive into the credit portfolio, actually our credit portfolio is quite diversified across multiple sectors and customer segments with three strategic pillars: retail, SME, and AfriCredits. As you all knows that 2020, during the post-COVID pandemic, AfriCredit was facing a difficult time with their business. So as a result into the lower contribution of our subsidiary to the total portfolio, credit portfolio of the consolidated bank. However, the bank, along with SMBC, have implemented a comprehensive restructuring programs at AfriCredit starting around May 2023. And ever since the comprehensive structuring programs, it has helped the consumer subsidiary undergone through a quite positive outcome. And also, like starting in Q2 last year, the company started like delivering the positive bottom line again that contribute to the whole group. If you look at the credit portfolio in 9 months only, the credit expansion was led by corporate segment, particularly beyond real estate. We also focus on expanding the portfolio in other sectors, prioritized sectors that, as mentioned by our CEO, which include like manufacturing, wholesale retail trade, and hospitalities. And currently, the real estate account for 23% of our total loan book. Other industry like wholesale retail trade processing, also hospitalities also saw a quite positive momentum. And by the end of September, these sectors, like for example manufacturing, have shown like above like 50% of the growth year to date. Hospitality, for example, will benefit from the increasing tourism, international tourism to Vietnam. So we also expand quite a bit into credit lending to that particular sector. And as a result, the volume of credit expanded to this business also increased threefold comparing to the end period last year. Retail also made some early catch up after some periods of modest performance last year. And if you look at the retail products by retail by products for 9 months 2025, the majority contributions are coming from secure products, which account for about 90% of total secure book for the whole bank. But looking for retail portfolio, the main driver and contributor of retail product is mortgage, which account for about 42% of the total retail book. And the other contributors such as business loan, auto loan or consumption loan also play a key important role within our secure lending. Besides that, unsecured lending is also considered strategic segment that we're focusing on, particularly the good performance of a CAC and unsecured personal loan. And we also expect that with this unsecured portfolio, we not only extract more customer to the bank, but we also help to expand our NIM in the future. The credit by segment that represent the consolidated figures. For retail by product is for retail banking for parent only. The retail product is excluding AfriCredit. But if you look at the credit by segment, we have subsidiaries account for 12% of the total credit portfolio. That include others, all subsidiaries within the bank, FE and also Vivint Securities. Okay. Coming to the next pictures about funding structures. Our funding structure remain quite diverse and robust. And we believe that the diversification of our funding will provide a solid foundation for our credit expansion. And we always keep very well aware of those liquidity, what we call like liquidity and healthy balance sheet management to maintain the growth of our deposit and funding mix in accordance with the credit portfolio. As you can see in our funding mix, currently the customer deposit continue to account for the largest share of the bank funding base, consistently representing more than 70% of the total mix. And if you look at particularly in 9 months 2025, VB Bank have actually delivered the highest year-to-date deposit growth in the industry at 25% on consolidated picture. If you look at the profiles of our customer deposit in 9 months, our CASA ratio is 15.7% and TD is around 84%. And CASA is actually has always been the strategic priority within the bank to increase our market one deposit. And by the end of September, our CASA volume actually reached a new height of nearly 100 trillion VND. That represent all around for nearly 34% year-to-date growth. And we'll keep that CASA in mind and we'll continue implementing some more initiatives, both from retail and corporate, to enhance and expand our CASA position in the market. In terms of valuable papers, we have about nearly like 46% corporate CD. Retail CD also account for like 20%, and the remaining are bonds. And actually into 9 months 2025, we have actually boosting a lot in terms of expanding our CD for retail customer. And we have launched a CD called Work that are quite attractive and competitive with retail customer in order to attract them to put more CD with a longer term than TD in VP Bank. And also, if you look at by tenor, the majorities of deposit in our VP Bank is less than 12 months. That's quite natural and inconsistent and in line with the deposit trend with many other banks in Vietnam. So we understand the importance of long-term liquidities to support the balance sheet and credit expansion. So we will accelerate the offshore funding with long-term tenor to provide us the sustainable liquidity. As you can see here, if you look at the proportion of long-term offshore funding in our funding mix, it shows an increasing share over years, starting from like around 4%, and right now by the end of 9 months 2025, offshore term loan has account for like roughly 8% of our total funding mix. And recently, VBank has secured a syndication of nearly 2 billion USD from many leading global organizations, and those has been led by both SMBC, IFC here, and also some of our long-term partners like ADB. We also became the first private bank in Vietnam to tap into the global ESG capital market, and we issued 300 million USD in terms of international sustainable bond. In terms of LDR, our LDR is normally stake around 100% because of our strong credit growth. However, this is around this LDR for market one. But if you look at like LDR for SPV, and this is for parent bank regulation only, the threshold for LDR is 85%, and we always comply with the threshold. But by the end of September, the LDR SPV of VPBank stay around 82% and always stay in compliance with SPV requirement. Next picture is in terms of capitals. So sure. SPV threshold is 85 and we're at 82.
So under the formulas by SVB, normally the interbank, the monetary interbank borrowings are included. So here 100% is just we purely calculated like the loan to customer plus the corporate bond and divided by the customer deposit and valuable papers. Yeah. So I think from time to time, normally our LDR, we are target around more than 90% to 100%. Some figure, yeah, we have some ask some maybe you asking about the consolidated LDR. It is a little bit higher because of the nature of our FE credit. They cannot mobilize from the retail customer. So for the LDR, it should be calculated on the parent bank and separated basis only. Yeah.
So in terms of capital, this is just a recap of our achievement over the past 5 years. Mr. Wing has already shared with you our capital plans for the next 5 years. So if you look back 5 years ago, from 2021, VPBank has actually the only bank that were quite successfully in terms of execution, the two largest M&A deal in the Vietnam financial history. And allow me to recall that the first deal is the sale of 49% our stake at FE Credit to SMBC in 2021. And the second deal is again with our strategic partner SMBC to welcome them as our strategic shareholders and getting them to own 15% of VPBank of VPBank stocks. The strong capital foundations allow us to expand or to maintain the healthy balance sheet and also allow us to expand further into the credit portfolio. And as a result, also we were able to maintain the very high CAR level, much higher than the minimum regulatory requirements at 8%. So constantly stay around 14% level and above from time to time. Yep.
Very strong.
Yeah, I think for the minimum requirement of the SPV is 8%, but I think average it is lower than 12% because as far as we know that the state-owned bank, their capital adequacy is just 9 to 10% only. Yeah, and they are trying very hard to do the private placement and to do the more capital injection in the last 2 or 3 years, but it is really hard to complete to that. And with VPBank, with the two largest M&A deal like Giang have shared with you, I think our CAR is now 40%. And as Mr. Wing said that, CAR and capital injection is very important for VPBank so that we can deliver our very aggressive and ambitious business plan. So in the next few years, Mr. Wing has answered you. Yeah, we are thinking of 3 chances of raising more capital for us. Yeah, and we do think. I think it is not just like VPBank is lucky to have SMBC and then to M&A deal. It is because of our strategies. From our board of directors, we do see that in Vietnam and developing country, owners' equity is very important. especially for a bank. The more capital you have, the more advantage you will be get, and you can see that we are in developing countries, so that the credit growth will be higher in other mature countries. So with that, we only do that with our very solid and strong capital base.
One last point that I wanted to comment on the capital pictures of VPBank is recently VPBank has officially registered with the SPV to adopt the IRB approach, the internal rating based approach under Circular 14, which is quite similar to the Basel III implementation. And we're hoping that after the piloting programs for 2 years, the Circular 14 allows banks to have like 4 year preparation for the adoption with some higher regulatory limit. And for VPBank, we are hoping that after 2 year piloting programs, we will be officially announcing the capital implementation and reporting disclosure under Circular 14 or Basel III in the next 2 years. And now we are one of those few banks in Vietnam that have officially registered for that.
Very practical or technical question. So CAR of 13.8% is below the normally what you would see in VPBank, and due to high growth in the loan book. On the other side, we understand retained earnings is one of the main sources. Technical question is the profits which you have now but are not retained yet by the decision of the shareholder to retain, are they in Tier 1 capital already now, or will they move to Tier 1 capital or in the calculation of capital adequacy once the shareholder decide to retain the profits? So the question is, once the annual general meeting decides to retain, will your capital adequacy ratio increase or remain on the same level?
I see. I got your point. So actually, yes, we need the decision from the AGM, and that is very important for us to decide how much we will set aside for like the reserve. Because under the requirement of we will have like the financial reserve and other reserve, and then we can do after all set aside for the reserve, we can calculate how much we do have left if we have the intention of paying dividends. Yeah. So that is the audited figures, and the AGM's decision are very important, but just for the reserve and for the dividend decision. But for the like accounting standard, normally the 9-month retail figures are calculated already in this figure. Yeah, but we cannot assume that all of the retail earnings here are ready for like a division dividend. Yeah, but it is already in Tier 1. Most of our capital adequacy here and are coming from Tier 1 capital. We are doing not very much, very little in terms of Tier 2 capital. Yeah. So Tier 2 capital under the regulatory requirement of VAS, it is mostly the provision, the 80% of the like a provision reserve only. Yeah, and we can also issue the subordinated debt, but the tenor should be more than 5 years. But actually, VPBank, I think we are comfortable with our Tier 1 capital at nearly 40%, and we are doing no, I think as at this point in time, we do not have subordinated more than 5 years. We do not have. Yes, but mostly the core and the Tier 1, as Mr. Vinh said. So, but in the case of, we are thinking of doing the Tier 2, because the option of Tier 2, it is capped, I think, 50% of the Tier 1. Yeah, so it is also another room for us to, if we want to increase our capital adequacy. Yeah.
So turning to the earning part, the first one I want to share with you is on our net interest income. So you can see on here, like for our consolidated figure, is also have grew like around like 14% for the 9 month year over year. And you can see that's like our yield and NIM has facing some challenges during the period of 2022 and 2023 when we have to lower our interest rate to support for our customer. And also like due to the lagging performance at our subsidiary FE Credit. However, I think like preserving NIM is still one of our main priorities, and we have done several initiatives to preserve our margin, including like structure our portfolio mix. If you recall, like this morning, Mr. Hian, the deputy head of retail banking, also sharing that like we want to shift toward more unsecured lending so that we can generate more profit from that. And at the same time, we also want to strengthening our asset quality and accelerate on of the debt recovery and collecting suspended interest. So that's two factors is like at the parent bank to help us preserving NIM. And also the third one is like to do the comprehensive structuring at FE Credit. And one of the thing I want to highlight in this slide is thanks to the capital injection from the SMBC deal back in 2023, and also with our effort to continuous optimize our funding costs. You can see that like our cost of fund have been improved significantly by nearly 200 bips in 2024. And even in the first 9 months of 2025, with such aggressive deposit growth, we are still able to maintain a slightly increase in our cost of funds, just like 10 bips compared to 2024. And one of the key things I want to share is just like majority of our lending book are on floating basics. So they will get repricings every 3 months. So that's like any increase in the funding cost, even in the current macro environment, is being gradually reflected in our lending rate. Next. Mm-hmm.
They are sort of conflicting, right? And of course, you can include in other. How does this? This will have a negative impact.
Yes, so thank you for your question. So let me, I think, elaborate more on this one. So previously, VP Bank, we are doing focus on retail banking, and pre-COVID, our unsecured lending used to take account for nearly 15% of our total loan book. But after COVID and our customer segmentation, mostly the mass and lower mass and even upper mass customer, they are impacted by the COVID. So that is why at that time we decided that we will do the tightening credit policy. That is why we reduce our unsecured loan proportion loan book, and so that keep it as at this point of time now. But I think with all the macro indicators that Anh Trường and the team have shared with you, and we are quite and Mr. Vinh said, we are quite optimistic with the overall economy. So we do think that the retail consumption will be bouncing back, and that is why we target to increase the unsecured part, like I think up to 14 or 15%, like in pre-COVID level. And the second thing, it is impacted on the NIM and the NII under the Vietnamese accounting standard. It is the accrued interest of the customer. And when the customer, they are in not performing well and they are under the group 2, maybe mentioned or doubtful debt, we cannot how can we say, we cannot recognize and record their accrued interest income, and we have to book it into like off balance sheet. But when we do good in terms of collection and the customer becoming performing loan and back to group 1, we can revert all the accrued interest that we book to our balance sheet in terms of our P&L. Yeah, so that is why collection, it is also very important to revert the customer back to group one so that it increase our NIM. But yes, of course, the question is how to increase the unsecured, but keeping the NPL at a moderate and reasonable level. Yeah, it is also the thing that our management have to and particularly our retail banking have to bear in mind. Thank you. Yeah.
Are you able to keep them?
Yeah. So yeah, good question. Actually, yeah, it is the business model, especially when we have FE credit. Our subsidiary is playing consumer finance, so we have higher NIMs, but of course the credit cost it will be higher. But the good thing is that our credit cost is on the downward trend, particularly in FE credit when they are experiencing a comprehensive restructuring, and also at the parent bank, we're also doing good in terms of collection. That is why we're bringing our credit costs at the parent bank just around 1.5, 1.5 to 1.67 percent only. Yeah.
And for the consolidated bank, we also have been able to bring it down like from around like 4.5% last year, and right now it's like around like 3% for the consolidated. So it's like the collective effort from both the parent bank and also FE credit in controlling our asset quality.
Yeah. Yeah, I think we are more or less the same, a little bit higher with the banks with the consumer finance arm like HD Saison by Military Bank. They also have higher credit costs than the peers. But actually, our FE credit they are number one in terms of the consumer finance in Vietnam. So the contribution of FE credit is bigger than the other peers. So I think yeah, for the credit cost, maybe yeah, number one in memes and also yeah in the
And
top.
I think like we are really proud that we have the best collection team in the banking industry, because we know that's like our business model focusing a lot on like retail, SME, and the lower mass segment. So we have built a really dedicated collection team. I think collection division since last year in June 2024, and we have developed a quite comprehensive collection strategy for each of our segment and for each of our product. So that is why if you compare, for example, our income from bad debt recovery, I believe is the highest in the market. Recovery, yeah, it's like to show our collection effort.
It is the collection when you collected when the customer we have been written off, yeah, and it is recorded in other income. So yeah, if your collection is doing good enough, it will bring the revenue to you in the next few years. It does not mean when you write off a loan, it disappear. And now yeah, but if you do the collection good, it will be recorded in revenue in next years. Yeah. Yeah.
Low?
Yeah.
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 So it's not nominal amount, but it's.
Yes. Yeah. 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 In other
Next
income.
slide.
Yeah.
So here's like coming to our net interest income. So at the bank, we always believe that we have to diversify our revenue stream to support for our profit growth, and we have continuously increased the contribution of our fee income, FX and investment income. And also one of the key factors that we have recently focusing a lot is the income from bad debt recovery. And also, like, if you see on the left-hand side here, in terms of non-interest income, you will see that like compared to the last year period, the 9-month 2024, our non-interest income had grown significantly at 32%. And beside other factors, including the income from our bad debt recovery, we also like, have continued to grow our fee income. And within our fee income, we have like beside the other main contributor, like for example, the credit card payment and acquiring services, our brokerage, VBank Security, have done quite well in the first 9 months of the year by doing a lot of like the advisory for bond issuance, and also like they have realized some of their investment income thanks to the favorable stock market. And also, even we have witnessed that like there is a little bit slowing down in our insurance market in Vietnam, particularly with the life insurance. At VBank, we have shifted a little bit and tried to promote the non-life insurance. And if you recall, within our VBank umbrella, we have OPAS, is one of the digital insurers that focuses on the non-life insurance. And I believe right now, like some of their products, for example, the health insurance, auto insurance is like the number one in market in terms of like their premium revenue.
When do you run?
Hmm?
When do you run?
Normally
When
under the under Vietnamese requirement, it is for a secured loan. Normally you have to prove that you cannot do own by own means. You cannot collect the loan. So normally the time where you can do the write-off is 1 year. Yeah. But yeah, for some part of unsecured loan, and we statically say that maybe more than 180 days, it is really hard to collect the loan. So for some part of unsecured loan, we can do early write-off at 180 days.
So coming to this slide, I just want to share with you like our total operating income have been continue to hold the number one position among all the private bank, thanks to the contribution from all of the member within VBank Group, and continue to like deliver an outstanding growth in scale. You can see that's like our performance in the last 5 years have continued to strengthen, particularly with our consolidated profit before tax, as Dan already mentioned, as the 9 months have been reaching over 81% of our full year target for this year. And we are also believe that we are on the strong momentum to fulfill the full year target and even exceed that for 2025. And all of that have been prepared a strong foundation for us to step in 2026 and even for our next 5-year plan. And in terms of our efficiency indicator, given that our ROE have been impacted a little bit during the 2022 and 2023, since we have like a huge capital injection from the SMBC deal, but we have been able to bring it up to 40.5% as of the 9 months of 2025. And it's once again to demonstrate our effort in boosting the profit from all of our revenue stream, not only from the net interest income, but also from our non-interest income, including fee income and the income from bad debt recovery. And our cost to income ratio remain one of the most efficient level in the industry at 24.3%. At VBank, we always prioritize that we have to prioritize our operational costs for digital investment and at the same time for our talent development. But at the same time, we have been doing a lot of digital transformation, automation to decrease our operational costs. And that is why you can see that our cost to income ratio have continued to maintain at a really healthy level. And I think with that, like you have like further Q&A for any of this figure during our presentation, just feel free to.
This slide pack we will send to our FI team and then circulate to you for more reference. Yeah. Yeah. They're required.
Hi. Hi, may I ask if you have any question?
Okay, I think if you have any follow-up questions, so please send to Nga and Steam, and then we are happy to answer you if you have anything.
Yes, yes, Martin.
Can see MM and term loans. Yeah, they can. And if monetary, I think only around 19%, right? Yeah. So our core funding mix is still coming from deposit and valuable papers. Yeah. In, yes.
Yeah.
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 Term loans.
Yeah, this consists of purely offshore funding.
These are
Yeah.
longer term.
Yes, 3 to 7 years.
Hmm.
And for
I think let me before answering your question, I think let me clarify in terms of the MM line here, which is 19%, which is including the local MM limit and also the offshore short-term borrowing, right? Yes, yeah. So we can we have two source in the MM here, which is local PND, interbank, like money the placement. Yes, we from other institutional bank, and also we have a portion. Mm, that number we check. Yeah, but I mean that let we check the number. But I mean that in we have some portion we borrow under the trade loan from other banks in US dollar for tenor from mainly from up to 6 months. Yes. Interbank activity in the in the local market mainly up to 3 months. Yes. Mm, mm, yeah. Mm, interbank interbank trong nước. Tổng là bao nhiêu? Cái này là cái này là cái này là file quốc tế đấy. Thế thì cái này Mm,
Generally,
yeah.
your
Yeah. Yeah. Yes. I think the first of all, we have I think VP Bank we have a huge limit, quite huge limit from local bank. So we have dealing with big state-owned bank, four big state-owned bank, and then we have also have the limit with local bank like top local bank in Vietnam. Yes, and I think in terms of the counterparty, we are dealing with around 15 to 16 top bank in the market with huge limit for interbank. This is yeah, yes. Asset side, we also dealing with the top like 15 to 16 bank. Yeah, and almost the same range. Yes. Yeah, for the lower tier bank, like lower tier bank, we can provide some limit, but on secure basis. Yeah, yes. For example, they can place some CD or with us, and then we can provide some limit to them. Yeah, but on I think selected client, selected partner, and with a certain limit, but we are dealing actively and expand the limit with around top 15 to 16 bank. Yeah. Yes, yes, yes. So I think this might be answered by yes, the guy from Treasury team. I'm yeah. For liquidity, for our daily liquidities management. For mainly, line is mainly to manage the liquidity. Yeah. Mm, yeah. So maybe Mr. Chung will be in the position to give you the picture on the funding mismatch tenor. Yes, yes. Mm.
But here check on that because in financial statement we don't class the segregate the line for and home loan. We include them in one line for deposit and borrowing from FI.
Mm.
But I can see from here that our net liquidity gap is positive of nearly 177 trillion VND positive. The net liquidity gap in all channels. So in terms of the interbank liability, maybe you may ask the IRM team tomorrow for the proposal. Yeah. Capital. Không là capital. Capital. It is normally it is decided other by AGM. Yeah, it is decided every year. We will hold the AGM. I think normally at April, and after that AGM resolution, we will have also some resolution in terms of capital injection or capital raising, and in that the AGM will decide how much we will increase and the tentative timeline for that. But for next year, we are waiting for April 2026?
So currently what we got is like we are still in budgeting process. So we have developed some kind of capital planning program and we are still like submitting for our board of management and board of director to review and choose like which option is the best for the bank and then we will submit to the AGM in April.
April.
Yeah.
Yeah. Mm. Actually, the AGM, it is the official forum, but actually we can seek for the AGM's approval through by voting ballot and by emails, yeah, by letters. Yeah, so the AGM we will hold officially very big and inviting what everyone apply there and doing the ballot and voting. Yeah, it is a. But if there is something urgent, we can ask for the permission ad hoc by the emails or by the letters, and the AGM will sign up there, and then they will send it back for the bank.
Not an annual, but like the ordinary
Yeah.
AGM, like that. So whenever basically, if we have any capital decision, let's say we have to execute them in Q1, for example, we don't need to wait until April, but we can seek the approval from extraordinary AGM at that point of time to get the approval, and we can execute that right away.
But
Yes. Yeah. Then the
yeah.
yes.
So actually, Mr. Wing has shared with you that our retail earning for this year, it is also rather very big, and I think it is quite enough for the Q1. I know you're concerned that if Q1 you grow very fast and your capital adequacy decrease, right? So what will, yeah, and it is not the time for the upcoming private placement for that. Yeah, but actually, yeah, our retained earning for this year, after we have audited figures normally we'll have around at the mid of February or something. Yeah. So yeah, at that time, yeah, we will know how much we will have for our retained earning, and yeah. So Mr. Wing also say that we give the priority to SMBC. Yeah, so they are existing shareholder and know us very well, and they also have the interest. So yeah. Yes. Yeah. Yeah. You will have the section about corporate governance and the equality for shareholders. It is really important thing. Yeah. Yeah. Yeah.
And also like one thing to keep in mind, like in Vietnam, usually Q1 is like a low season, and usually like starting like in the second half of the year, Q3 and Q4, you will see a peak in our credit growth. So that is why like at least for the Q1, we are still in a good shape with our capital adequacy ratio, and maybe like starting in the Q2 is like the prepare time for us for the capital raising, and then it can be done in the second half of the year.
Yes. Yes. Yeah. Yes. So normally the last private placement of selling 15%. Yeah, we have to 1 year ahead. Yeah. So we have in active discussion. Yeah. Formal approval. Yeah, I think thank you for yeah so much. Yeah. If I have any follow-up questions, yeah, send to yeah FI team.
Yeah.
Yeah.
Thank you Ngọc. Thank you Giang and Hạnh nhé.
Là hôm nay xong rồi đúng không chị?
Ừ. Yeah. CFO. Yeah. Thank you.